Hey friends, Lucian here with the Bullish Bears team. Wanted to do this video on intraday meaning and what it's like to do intraday trading. When you're doing intraday trading, you're buying and selling stocks within the same day. And that's between the hours of 9:30 a.m. to 4 p.m. Eastern Standard Time. And the best time to trade stocks is typically between 9:30 a.m. to 10:30 a.m. Eastern Standard Time. And the second best time is after lunch on the last hour of the day, which is power hour, and that's between 3 p.m. to 4 p.m. Eastern Standard Time. And when you're doing intraday trading, that's how you get the term day traders, right? Or day trading. You're trading within the same day. And what you're looking to do is trade quick movements and price action. It's not an investment strategy. You're not going long term. You're looking to get in and get out. And a couple popular trading strategies, which I'll talk about, are scalping and trading the opening range. And you can do this when doing, with penny stocks, large cap stocks, medium range stocks. It doesn't matter. Again, doing intraday trading is trading any type of security within the same day, right? Another popular strategy is day trading options as well as ETFs. So when you're day trading options, you can trade large cap stocks without putting the large capital outlay up front. And day trading, ETFs allows you to trade hot sectors without having to purchase actually shares within a sector. So you're basically trading large caps or large sectors without having to put out that outlay. So a lot of people will day trade options and ETFs because they're not fans of trading penny stocks, right? They're a very profitable trading strategy to do with day trading options. So again, it's a matter of choice. A lot of people will trade, shares of penny stocks, or they'll do large cap stock shares, or instead of putting the capital outlay out there for purchasing stocks, they'll day trade options or ETFs instead. Now, here are some things to look for when you're doing intraday trading. Time frames, right? You want to look for your time frame with, typically with intraday trading, you're looking to get your entry on a 1 minute, right? 5 minutes, you're looking for a good 5-minute setup. So ideally, you want a good 5-minute intraday setup, then look at your entry and typically your exits on a 1 minute, depending on what your strategy is. That's if you're looking to scalp. If you're looking to hold a little bit longer, then you might get out or exit on a 5-minute setup, or depending on the hourly, right? So an hourly chart is really good for determining kind of that short-term intraday trend. So a good hourly 5-minute, 1 minute chart, again, 1 minute for your entries and exits, 5 minute for the setup, and that 1 hour to determine the trend. Now, daily chart is also very important because you want to look for things like daily breakouts. Now, many times there will be daily breakouts on a chart without any particular news catalyst. A stock may break out with the overall market, so it could just be a daily breakout without news. But ideally, you want to get a stock that has a momentum catalyst, which is a news catalyst. So good news, both good and bad, can typically, positive news many times will do breakouts on a chart, and negative news will also cause breakdowns. So it all depends whether you're looking to go long or short. Either way, news catalysts drive momentum when you're looking to do intraday trading. Another important thing to look for is high volume. A lot of volume equals liquidity. So you want to be able to get in and out of a stock, and that's where stock volume comes in. You want people trading it. You want a highly liquid stock, so you have the ability to get in and get out. And you're also looking for a tight bid-ask spread. So that's, I typically trade stocks that have a 1 to 2 cent bid-ask spread, but a lot of times with low float stocks, you might get a 5 to 10 cent bid-ask spread. Sometimes on the volatility, it may be even wider than that, and many times it'll tighten really quick on a breakout. Just be careful. The wider the tight bid-ask spread, it's just you're getting into that trade down at a loss, if you're buying, depending when you're buying, if you're buying the ask on a 10-cent wide spread and you bought 1,000 shares, you're down right off the bat $100. So you better make sure you're choosing the direction and you know what you're doing, because a tight bid ask spread that doesn't go your way, that's a chance to really lose on a trade. So again, very important, liquidity, and ideally you want a tight bid ask spread. High relative volume is also very important. So whatever a stock typically trades within its average volume, if you get 2 to 3 times or more volume in the day, then you have, again, a lot more eyes looking at it. High relative volume, especially on breakouts, very important to watch for. So look at the higher the relative volume, see if it's based on a news catalyst. If you get that high relative volume with a news catalyst, with a daily breakout, you have that momentum on your side. Now float, there's low float, also medium float, high float, but the lower the float, the higher the volatility. The higher the float, the lower the volatility. So more risk, more reward with low float. That's where the term pump and dump comes from. It's typically from low float stocks. Not that high float stocks won't pump and dump, but they're typically a lot less than with low floaters. And then a couple popular trading strategies intraday. Again, there's several that you can do, but scalping, that's a very popular one. That's using your account at leverage, using your account as leverage, scalping 5 cents, 10 cents, 20, 25 cents. So if you bought 1,000 shares and you scalped 5 cents, that's $50. If you did that 5 times throughout the day, that's $250 day, so that's really good. So don't underestimate scalping. Again, you're making several trades throughout the day, but you're looking for those small wins on each trade. Range trading is trading that opening range breakout. Typically within that first 30 minutes, you're in and out. So you're riding that momentum, then you're done for the day, after that first 30 minutes is up. Other things you can do are kind of doing that riding the 9 strategy, getting in a good position, kind of riding that 9 EMA up, whether you want to use the 5 minute or the 1 minute, to stay in, depending if you want to stay in a little bit longer. Watch for pullbacks intraday on a 5 minute chart. Again, that 5 minute is a really good gauge. So you can many times let that stock break out, watch for a pullback on a 5 minute chart, and then get in. And then typically if you get a good exit or a good entry and price action, those moving average lines are pointing up, you might just use that ride the 9 on a 5 minute throughout the day as well. So again, several trading strategies that you can do. But again, a couple of the most popular are scalping and range trading. And what this does, when you're doing intraday trading, is you're limiting exposure to the market, right? So the longer you're in a trade, right, you're susceptible to news in the overall market that can drive stocks down. You never know what can happen within the world, a virus or anything, right? Threats of war that affects stocks. But in particular securities, again, poor news can come out at any moment. And the longer you're in a trade, again, you're at the risk, or the more you're in a trade, you're at the risk of the markets or news. Again, we encourage investing and doing longer term trading, but intraday trading allows you the ability to get in, get out within that day, and you're not having your money invested in being in a particular security for long periods of time. You're in and out that same day. So just to show you what this looks like here, you can see kind of I have a high a day scanner flowing right here. You'll see the floats are all different. Anything under 20 million is low float. Under 10 million is super low float. This is Thinkorswim. Shares is shares outstanding, so it's a little bit higher than float, but it's actually a good gauge. So, you'll see stocks that are hitting high a day scanners, and you'll see kind of these ones that rip. They'll go and they'll just gap up, and they'll go from 80 cents, and this ran up to $1.68 today. So you can watch for those moves up, watch for the pullbacks, trade the breakouts, right? So kind of those flags kind of pulling back, trade the breakout, and this is a 5 minute chart. You would be out within maybe 5 or 10 minutes right over here, So typically being in, these lower to medium float stocks, it's a little bit harder to ride that 9 because you can see they have these, huge spikes. So a lot of people will watch for it to break out, pull back, And then as it breaks out, take your profits. As it pulls back down, looking to potentially get in, take your profits, right? So, also you want to be careful after those first and second pullbacks. Many times it gets a little bit crazier because, again, more volume comes in. But you'll see throughout the day, you can have several scalps. That's on a 5-minute chart. You zoom in on a 1 minute, you can trade those bull flag breakouts, and price kind of pulls back up, comes right back down here. Let it, get in at the break right up in here, something like this, 87 cents, looking for a potential break above $1, high a day right up over in here. This thing moved 1 minute, 2 minutes, 3 minutes. You're out right here. It rejected right around $1, pulls back down again, right? But use your account as leverage. 87 cents, let's say up to, 95 cents, that's an 8-cent scalp, right? So you do that several times throughout the day. That's how you can build your account up, use that account as leverage, right? So again, this is on smaller cap stocks. You can, again, I'm just showing you one example here. You'll see many times too, stocks will pull back and run towards the end of the day, right? They'll go flat at lunchtime and then they'll have an afternoon run during that power hour. And you'll see this happens all the time, all throughout the day. Stocks will hit the scanners and these day traders will come in, look for an entry. This is that first half hour of the day. Then many times it'll pull back down, and then, stocks, as it pulls back, you look for another breakout, and then this thing can rip, right? So again, this is what happens with day trading all day long. So just think of day trading, intraday trading, same exact thing. You're looking to get in and out of the stock within that same day, whether you're trading that half hour opening range breakout, whether you're looking to stay in a little bit longer, use that ride the 9 strategy, or, come back in during power hour and see what's running towards the end of the day. So if you need more help, you can take our courses on our website at bullishbears.com. We teach how to do day trading in our trade room each day at bullishbears.com. You can come and join us, try us out. And again, if you like this video and it helped you in any way, we'd greatly appreciate it if you like it, share it on social media, and feel free to post comments below. So hopefully this video helped you, and we'll see you all in our community. Enjoy.